Welcome back, and in this video I'll be diving into the first variant of Case 2 of Outback. This was going to be the only entry type, but through deep manual analysis, which I'll go over shortly, I found a more filtered down version from this, which will be presented in the next video. This is the intermediate version of Case 2 and is growing to be my favorite, so with all that being said, let's get into it. So, the main difference between Case 1 and Case 2 is we add daily level biases in this. And so for this specific case, this intermediate case, you can almost say case 2A, price needs to break, doesn't need to close above or below the second previous daily level to establish a trend direction. So if it breaks the high, if it just wicks over the high, that is bearish. If it wicks under the low, that's bullish. Second, price needs to be within the previous daily range. It needs to be closed within the daily range. And then third, similar to case 1, you just need the Outback to print for that signal. Now, with all that being said, let's just look at AU on the 5-minute. By default, as you can see here in case 2, I've seen before, the 15-minute is the default higher time frame for this because it's more interactive. We're kind of catching those reversal moves around the daily grabs, but the 1 hour can be pretty lethal in this too now. So through your own testing, look at the 15-minute with the 5-minute and look at the 1 hour. I don't necessarily recommend using this on the 1 minute. This case 2 is more of kind of a 5-minute driven style of strategy, but I mean, it could work too. It's just 5-minute is more filtered, less trades, and you get a cleaner signal usually. And on the 1 minute, it spams a lot of the times, to be honest with y'all. So with all that being said, like I said, the 15-minute is usually default. You can go with the 1 hour on the 5-minute. We do speed up the Outback RSI settings, as you can see here. And then the price must break the previous daily high and low. We keep this off for this case, and we turn this on for the other case. And it might not seem like a crazy difference, but it is. And then we have the simple moving average. We quicken that bad boy from 55 to 21 as we need to be more responsive for this specific case. Lastly, this might be off on default, but draw daily high and low, turn that on so you can get a clear picture of what you're looking at. And then the ignore zone, we've gone over that previously. Whenever you turn this on, you'll highlight here and no trades will be presented in this time zone. But we'll take that off for now. Okay, so the main differences between this specific case and the more filtered case 2 version is that, like I previously said in the steps labeled just now, price needs to break the second previous high or low. So as you can see, it's here. So whenever you're trading in the specific day, the previous daily high and low will be above and below your price on that specific day. If you zoom out left, you will see that price will step down. Sometimes it'll step up. It steps down your second previous daily low. So imagine these extend out throughout the entire day, and these are your biases. So in this case, last Friday on February 23rd, when it happened was price went above and it wicked above our second previous daily high. As you can see here at the top, as we've gone over before, this is our case 2 daily bias. So as you can see, we were gray on this day, and right when we got this cross, we turned red. So this basically tells you what your overall day's trend is and what signals you will get from this. But the main difference between this case and the other case is that we would not have gotten any of these sells because for the next case that I'll be talking about, price also needs to break the previous high, not only the second previous, but also the previous, and then come back down to get it. So just for reference, when I turn this on, all these trades go away, but when I turn this off, all these trades appear. So this is the main difference between the two cases. You get a lot more signals with case 2, less than case 1. So this kind of needs some subjectivity and ways to filter out some of these trades, which I'll be going over soon. But there were some good opportunities here. As you could see, we had a huge meltdown. And what I would look for in this case, since we are looking in a bearish trend, I would draw my fib. I'm a big retracement guy. Usually I could see it, but other people, I'm a big retracement guy. Normally I don't really have to draw them, but I like drawing it for the visuals so people can see things. And so as you could see, we had a huge retracement all the way back to the 70. Technically, we could take this too. So this would have been our London entry. It wicks all the way to our 70, and we could have took a trade during London, and we had a nice, could have got about a 2R, maybe target these lows. And then also for the people in New York, it came back, thankfully for us, to get another entry, popped the 70 yet again, and then came back here, we would then be able to target basically another 2R as well, which was nice. It did a very similar thing, but in the opposite of UC. So UC Friday, as you've seen here, literally the complete opposite direction, but same result. It came here, it went into the zone. So in this zone, this is the 61 retracement for me, and this is the 70 to 78. So anything in between here, this is all I'm looking for it to reject. It does. Once it does that, we have our outback signal, and from there we are cruising. Maybe we put our stop loss under that swing, and then we could target the high, or maybe target the second previous low. Rule of thumb, whenever I'm targeting with case 2, doesn't matter which version it is, if I can at least target the second previous, in this case we went pretty low to the second previous daily level. If I can target at least 1.5, then I'll look to do that. If the daily high in this case is pretty close, maybe I'll target that. But you can use the previous and second previous daily levels as targets. If it's at least a 1.5, do this. This is cool. You get about a 1.6, and that's a good trade. Kind of similar thing happened in U on Friday as well, similar to AU, where we had this huge move down. The price came up here. We got a signal right before London, but you did get that retrace, so maybe you took that. You probably lost that trade, but then it came all the way to the 70 in New York, and then you were able to get an entry right here on the Kangaroo. It was hopping around, and you could target a nice 1.5, 1.8 from this as well. You would have to hold it over the weekend, which isn't ideal, but you still end up winning the trade if you held it over the weekend. Now, you could say, Jay, you're cherry picking your trades, you're only showing wins, which technically just now it was, but what I ended up doing was going back all the way through August of 2023, all the way till now on EU, and I basically did an interactive journal, which will be available for everybody in the Outback backtesting sheet whenever everything is up. And so what I did in this journal was I went over taking every single case 2 print, at least one per session. I had like a general rule that I'll go over soon. And then from there, I separated between all the wins and all the losses for me specifically. That way I could see if there was any similarities between wins and losses. And I ultimately created this sheet here. So as you can see, there was 159 trades just taking nearly every signal. What I'll say here, if you look to the right, a general rule I followed throughout the backtest was I took at least one signal per session. If I saw a previous daily grab after that one signal in the session, then I could also take an additional signal within that session. But if I didn't see a previous level grab, a previous daily level grab until then, it was only one per session unless there even was one. And then a major concept I've seen throughout testing was if wanting to enter against a trend, you need a previous daily level grab first. And that's kind of where I came up with the second variant. And so this is kind of 2 birds, 1 stone. This is going through Outback Case 1 intermediate version. This is also going kind of a more deep analysis in backtesting, because we always tell you to backtest your trades. And if you would have just simply backtested the signals, you would have saw this and be like, well, this is not all that great. And I completely agree with you, but it's important to go back through your trades and see why were your losers losing and why were your winners winning. And that's where I kind of got these notes from. The PD is short for previous day, and that just means that not only the second previous low was taken, but the previous low was also taken whenever it was bullish, or vice versa for bearish. And then the X's were specific cases where the previous daily wasn't grabbed. And so if you would have this setting on, you wouldn't get a potential quality trade that you could have seen like through just market structure, just analysis, or just looking left. And 159 trades. And so all of the TradingView links that are highlighted, I'll just click this first one. Every single link that is highlighted, I wrote notes specifically about. And I'm pretty sure of the 159, at least a good 140 of those trades have notes about why I didn't take certain trades, as you can see here. So in the notes, the ones highlighted in yellow are the wins that I would like people to see and visualize on the charts. That way you can like spot these out for yourself. And then the ones I highlight in red are things that you need to account for, so that way you don't get stuck in some of these losses. For example, the X in this case is if I would have had the previous daily grab on, like in this case, I never get these 2 signals. Obviously this is a loss, this is a win. But I never get these two signals if I turn the previous daily high and low on, because it never came down here to grab it. But this was a quick second previous daily low grab into the trade, and it's an easy win. Also in these cases, this was just kind of a textbook, and I just put it's a big move off of the daily level. And I notice this a lot. Big moves off the daily level into just surges back down. Pretty good ideas of just a pump and dump. And as you can see, it dumped. And so vice versa, some of the red trades I marked in this case, as you can see, you did grab the low. And so we are bullish here. But realistically, we are forming lower lows and lower highs. In this case, this was the last lower high, higher low to this higher high, and then ultimately this point after two entries you get a lower low formed. Now I wouldn't have took this entry, but since we got a previous daily low grab, that was viable. So all these cases unfortunately consolidated around the previous daily low, so you were able to get all these entries. But if you just look at market structure, you can see the new lower low is formed. This is the lower high, so you need this lower high to be broken to be bullish again. Looking at another red trade, as you see, this is technically a good setup. This is the setup that we look for, where we go above the second and the previous daily high and we get a break back in. But the move has already started. We would have wanted to enter somewhere around here. We're also forming bullish structure and a bullish retracement where it literally retraces off of here and you just get completely reversed on. The trade before, as you can see here, we are bearish on the day because we obviously, like I said, we have this off to where you don't need this error. So like if we had that, if we would turn this setting on, price must break the previous high or low, we would not have seen this entry, but we're trying to find better quality entries with it off, or more entries with it off. And you're literally just forming a triple bottom. Price breaks out, you have a bullish retracement, and you shouldn't be selling this. Yes, a signal print, but as you could see, like price is just triple bottomed into a bullish retracement and you lose. So you can go through all of these trades that I have. Like I said, majority of these are highlighted. I even have like the starting and running balance totals here if you're interested in that. All the highlighted trades are wins that I like you to see. All the highlighted red trades or trades I like you to see that lost, trades that I like to see that won. And basically if it's blank, then it was not a logical trade to take, and or it wasn't a previous grab. And so this is how I filtered it here in the middle part. All case 2 signals, as you can see, it's kind of mediocre between August of last year, so about 6 months. Not that great. Trades filtered by the market structure plus other key setups. So like all the trades marked as X or PD. So any trade that has like a little abbreviation that accounts for this section, a complete jump up. Like in London, we literally take out like 23 losses. Mix, we take out 20 losses. New York, we take out 17 losses. And ideally, so this would be, London looks great for this. It would be about a 4% gain per month. You might not have 22 and 6. Maybe you have a couple more losses. So maybe you're 18 and 10 or 16 and 12, but still like you would still be a good 14, 15% the last 6 months. And this is only on EU. This works for USD pairs. It probably works for most Forex pairs and indices. It also works a little bit with crypto too. Like it doesn't matter. It doesn't necessarily matter. It can work with late Tokyo, but it's a little harder to trade late Tokyo just because there's a lot of consolidation. I don't want to not recommend it because there's a lot of good traders here at TTF that trade late Tokyo, like Carl and Anfield and Lemons, who do really well with it. So it is doable. I just wanted to test the major markets. And then from here, this is basically the case 2B, which I'll be going over in the next video. It takes out a lot of trades, so it's less gain, but it kind of takes majority of the thinking out of things. This is obviously the kind of, in my opinion, it would be the best alternative between all three options, but it requires a little bit of thinking. But as you can see, you could just go through all the trades that have X's, and all the trades that have PDs, like I said, are in this as well. But it's just simply if price broke the second and previous daily level. That's all this is. The X's require a little more thought. Maybe it was a quick grab off of it. Let's just try and find one, for example. Yeah, like in this case, it was perfect click by me. So in this case, we never get the break above the high, but with it off, you can see this is the second previous daily level high, price breaks it really quick, grabs it, and then completely dumps. And this would be a very good setup. This is basically like a nice setup in X, and that's why I highlighted it. And this is another setup. As you can see, we are bearish trend. You did grab liquidity here and then grab liquidity again, but we are forming lower highs and lower lows. And then from this instant, price comes up, we get a signal, but we need to be above here in order to be bullish or grab the previous daily low, which we didn't, right? And then we make a new lower low. This becomes our new lower high. Price barely breaks and closes above it with the outback signal. We're all good to go. And you end up winning that trade there. So that's kind of a change in direction in that point. And I'm gonna go over like probably one more and kind of call it a day. So yeah, this is another good example where you get a quick grab of the second previous daily low. We also get a nice bullish retracement around that time too. We have some liquidity taken here and a quick little scalp. Very small trade, but it works at the end of the day. So with all that being said, that is 2 intermediate version, and in the next video I'll be going over the more beginner version of case 2. Welcome back. So in this video, I'll be going over the final version of case 2, which is more beginner version. I do recommend watching the previous case 2 video because while this is beginner and while that's intermediate, there's a very small gap between the two. And I believe that most people can try that intermediate phase to get more opportunities to then filter themselves. But if you aren't as confident yet, which is completely fine, then this is the super filtered down version for you. But let's look back at the interactive journal that we went over in the previous video. And so this was me taking all of the case 2 signals. Then I went back and looked at all the wins and I looked at all the losses. I started jotting down notes of what I saw through winners, and I was making mental notes of what I was seeing through losers. And I noticed that PD, which stands for previous daily level, I was seeing that not only if the second previous daily level, but if the previous daily level was hit as well, those were more quality setups. They were few and far between compared to the 2 other variants of this that I tested, but it was higher quality setups. And so essentially what I did was I went back and I tested EU, as you can see here in the middle, GU, UJ, and GJ. With EU and G, I wanted to look over London mixed to New York, and with UJ and GJ, I only looked through late Asia specifically. So I want to make a note of that. So it's from midnight to 3 a.m. New York time, which right now is UTC -5. But we'll be changing to daylight savings time. So late Asia is basically the last 3 hours of Tokyo right before London. So everybody can kind of deduce from that logic. And so as you could see, it did pretty well. Just taking all of these, it bumped up the win rate tremendously. So from an overall 39, it went to about a 56 with 1.5 R. London and mix is pretty decent. Tokyo, late Asia is pretty solid. You don't get as many trades, but what I will say from the data that we found, the deep backtesting data, a lot of the JPY pairs do really well. I just select UJ and GJ because those are the 2 biggest and most popular ones, just to go through those. But EJ can work too, and as well as crypto, Bitcoin and Ethereum were looking pretty good during late Asia. But what I will say about Ethereum, usually has pretty high spreads on prop firms if you're looking to trade that. So I would always kind of lean towards Bitcoin over Ethereum if you're looking to trade with prop firms for that. You can see the breakdown from London, mixed, New York, and late Asia. London is pretty solid. It's been consistent since August of 2023 all the way till now. Mixed is kind of been hit or miss. Like you might lose a little bit, but you've had some huge months. I just don't believe that January 2024 was 12-0. It's kind of hard to see. Like, New York just slapped in January. As you can see, New York was 9-1, Mix was 12-0, so there have been some crazy gains, but it's hindsight now. Hopefully it can reenact some of that in the future. And then late Asia was a pretty solid pick too with UJ and GJ. What I also want to go over too is the data breakdown. And so the pairs per session, what I did was I labeled the times. This was gathered by our deep testing, but I do want to make this disclaimer. Just because a pair in our session combination with pair isn't on this list, it doesn't mean that it's not profitable. We try to implement the best stop loss version as we can, but as seen through manual testing, it can be quite different from the data here. Just use this as a benchmark in R of what to try out for your personal testing. Because what I mean by that is you come to London and EU is nowhere to be found. While in the testing, you could see that EU did really well in London. And so using just this as a benchmark is a pretty good idea. So what pairs should I try with late Asia? What pairs should I try with early Asia, London, mixed New York? You could start off with this, and then from there, kind of expand out if you need more trades for more opportunities, because it is filtered down a lot, right? This is 6 months of data. So this is data back from August of 2022. So we go back a good while, and it's not all that many trades, but if you can combine a good majority of quality pairs, then you'll be firing on all cylinders. So I wanted to go over the data really quick, just in case y'all have watched the previous video and kind of already know what the difference between that and this variant is. So for the people who haven't watched that previous video, listen here. So these are the rules for this case 2 beginner version. Price needs to break, not close, above or below the second previous daily level for a general higher time frame bias. So if it wicks above the high, you're bearish. If it wicks below the low, you are bullish. Price needs to also break the previous daily high and low as well. It needs to at least wick, if not close, above the high or low as well, in combination with rule 1. Rule 3, price needs to be closed within the previous daily range. And then rule 4, once you have a bias, then you're just waiting for that basically case 2 signal print. So when we go into Outback, we've obviously selected case 1. Don't select both or you won't see. No indicator will pop up, so you'll know if that's the case. So we've selected case 2, and it's very similar to the intermediate style where you can kind of go in between the 15 and 1 hour. It's kind of interchangeable, just depending on your testing. Just see which one works better for you. But the main difference is we'll be turning price must break the previous daily high low on. We have this ignore zone. This ignore zone basically means that whenever we turn it on, we will not be generating a signal at that time, right? So right now it's just 1700 to 1900 New York time. And so what that means is 1700 New York time, which is 5 p.m., is the market rollover. So for the first 2 hours after the daily market rollover, we will not be seeing a signal. You will now start to see a pretty big difference between just toggling this signal on or off, or this tick box on or off, because we're not getting these same trades as we would with it off. Now we're having to wait, as you could see here, for price to not only break the second previous daily high on this day, but it also has to break the previous high. So once it does, then you get your trade. And then in order for another signal to print, you need a unique daily grab for that as well. So came up here, we never would have got this signal. And it's very similar. Here's a sell case where price rolls up above not only the second, but the previous daily high. Price comes down extremely hard. We get our sell. Obviously, we don't take profit here because it's the market rollover, so the spreads probably have your trade up here, but then it comes down after the spreads have calmed down, and you get your take profit hit, which is awesome. Similarly here, price goes above our second previous high, and probably lose the first trade mix, but we win in New York because we put it above this high, and we end up winning in London. Unfortunate scenario for both of these, we get a breakdown of both. You probably lose both of these trades, unfortunately, but that's how the cookie crumbles sometimes. And then you have times like this where it's a little more risky because price is starting to gap pretty hard away from the moving average. But if you still take this trade, just be conscious of your stop. Trade ends up running still, you get a good win. All 4 of these rules, you don't have to memorize them. All I'm telling you is the logic of the indicator. You can just forget about this if you really want to, because All of that is included in the Kangaroo signal. And you will notice here at the top, you have your case 2 daily bias. And if it's gray, then you have no bias. If it's green, you have a bias. And if it's red, then you have a potential bias. But that doesn't mean that you will get a signal, because in this case, we still need the case 2 daily bias is just telling you that it's broken a second previous high or a second previous daily low. And just to reiterate, the data breakdown sheet seen in here and also all the backtesting data seen in here will be in the Outback backtesting sheet. This specific case 2 beginner version will be what we'll be testing continuously throughout the months. So at each month, whenever we update all our backtesting data, you'll be seeing all of this updated as well. Not the data breakdown is going to stay the same, but I'm specifically talking about this sheet where we have the 4 pairs tested here. You've been watching the previous case 2 video, because while this is beginner and while that's intermediate, there's a very small gap between the two. And I believe that most people can try that intermediate phase to get more opportunities to then filter themselves. But if you aren't as confident yet, which is completely fine, then this is the super filtered down version for you. But let's look back at the interactive journal that we went over in the previous video. And so this was me taking all of the case 2 signals. Then I went back and looked at all the wins and I looked at all the losses. I started jotting down notes of what I saw through winners, and I was making mental notes of what I was seeing through losers. And I noticed that PD, which stands for previous daily level, I was seeing that not only if the second previous daily level, but if the previous daily level was hit as well, those were more quality setups. They were few and far between compared to the 2 other variants of this that I tested, but it was higher quality setups. And so essentially what I did was I went back and I tested EU, as you can see here in the middle, GU, UJ, and GJ. With EU and G, I wanted to look over London mixed to New York, and with UJ and GJ, I only looked through late Asia specifically. So I want to make a note of that. So it's from midnight to 3 a.m. New York time, which right now is UTC -5. We will be changing to daylight savings time. So late Asia is basically the last 3 hours of Tokyo right before London. So everybody can kind of deduce from that logic. And so as you could see, it did pretty well. Just taking all of these, it bumped up the win rate tremendously. So from an overall 39, it went to about a 56 with 1.5 R. London and mix is pretty decent. Tokyo, late Asia is pretty solid. You don't get as many trades, but what I will say from the data that we found, the deep backtesting data, a lot of the JPY pairs do really well. I just select UJ and GJ because those are the 2 biggest, the most popular ones, just to go through those. But EJ can work too, and as well as crypto, Bitcoin and Ethereum were looking pretty good during late Asia. But what I will say about Ethereum, usually has pretty high spreads on prop firms if you're looking to trade that. So I would always kind of lean towards Bitcoin over Ethereum if you're looking to trade with prop firms for that. You can see the breakdown from London, mixed, New York, and late Asia. London is pretty solid. It's been consistent since August of 2023 all the way till now. Mixed is kind of been hit or miss. Like you might lose a little bit, but you've had some huge months. I just don't believe that January 2024 was 12-0. It's kind of hard to see. Like New York just slapped in January. As you can see, New York was 9-1, mix was 12-0. So there have been some crazy gains, but it's hindsight now. Hopefully you can reenact some of that in the future. And then late Asia was a pretty solid pick too with UJ and GJ. What I also want to go over too is the data breakdown. And so the pairs per session, what I did was I labeled the times. This was gathered by our deep testing, but I do want to make this disclaimer. Just because a pair in our session combination with pair isn't on this list, it doesn't mean that it's not profitable. We try to implement the best stop loss version as we can, but as seen through manual testing, it can be quite different from the data here. Just use this as a benchmark and R of what to try out for your personal testing. Because what I mean by that is you come to London and EU is nowhere to be found. While in the testing, you could see that EU did really well in London. And so using just this as a benchmark is a pretty good idea. So what pairs should I try with late Asia? What pairs should I try with early Asia, London, mixed New York? You could start off with this, and then from there, kind of expand out if you need more trades for more opportunities, because it is filtered down a lot, right? This is 6 months of data. So this is data back from August of 2022. So we go back a good while, and it's not all that many trades, but if you can combine a good majority of quality pairs, then you'll be firing on all cylinders. So I wanted to go over the data really quick, just in case y'all have watched the previous video and kind of already know what the difference between that and this variant is. So for the people who haven't watched that previous video, listen here. So these are the rules for this case 2 beginner version. Price needs to break, not close, above or below the second previous daily level for a general higher time frame bias. So if it wicks above the high, you're bearish. If it wicks below the low, you are bullish. Price needs to also break the previous daily high and low as well. It needs to at least wick, if not close, above the high or low as well, in combination with rule 1. Rule 3, price needs to be closed within the previous daily range. And then rule 4, once you have a bias, then you're just waiting for that basically case 2 signal print. So when we go into Outback, we've obviously selected case 1. Don't select both or you won't see, no indicator will pop up, so you'll know if that's the case. So we've selected case 2, and it's very similar to the intermediate style where you can kind of go in between the 15 and 1 hour. It's kind of interchangeable, just depending on your testing. Just see which one works better for you. But the main difference is we'll be turning price must break the previous daily high low on. We have this ignore zone. This ignore zone basically means that whenever we turn it on, we will not be generating a signal at that time, right? So right now it's just 1700 to 1900 New York time. And so what that means is 1700 New York time, which is 5 p.m., is the market rollover. So for the first 2 hours after the daily market rollover, we will not be seeing a signal. You will now start to see a pretty big difference between just toggling this signal on or off, or this tick box on or off, because we're not getting these same trades as we would with it off. Now we're having to wait, as you could see here, for price to not only break the second previous daily high on this day, but it also has to break the previous high. So once it does, then you get your trade. And then in order for another signal to print, you need a unique daily grab for that as well. So price never would have came up here. We never would have got this signal. And it's very similar. Here's a sell case where price rolls up above not only the second, but the previous daily high. Price comes down extremely hard. We get our sell. Obviously, we don't take profit here because it's the market rollover, so the spreads probably have your trade up here, but then it comes down after the spreads have calmed down, and you get your take profit hit, which is awesome. Similarly here, price goes above our second previous high, and probably lose the first trade mix, but we win in New York because we put it above this high, and we end up winning in London. Unfortunate scenario. For both of these, we get a breakdown of both. You probably lose both of these trades, unfortunately, but that's how the cookie crumbles sometimes. And then you have times like this where it's a little more risky because price is starting to gap pretty hard away from the moving average. But if you still take this trade, just be conscious of your stop. Trade ends up running still, you get a good win. All 4 of these rules, you don't have to memorize them. All I'm telling you is the logic of the indicator. You can just forget about this if you really want to, because all of that is included in the kangaroo signal. And you will notice here at the top, you have your case 2 daily bias. And if it's gray, then you have no bias. If it's green, you have a bias. And if it's red, then you have a potential bias. But that doesn't mean that you will get a signal, because in this case, we still need the case 2 daily bias is just telling you that it's broken a second previous high or a second previous daily low. And just to reiterate, the data breakdown sheet seen in here and also all the backtesting data seen in here will be in the Outback backtesting sheet. This specific case 2 beginner version will be what we'll be testing continuously throughout the months. So at each month, whenever we update all our backtesting data, you'll be seeing all of this updated as well. Not the data breakdown is going to stay the same, but I'm specifically talking about this sheet where we have the 4 pairs tested here. You'll see the end of February and the end of March here. So hopefully you enjoyed. If you have any questions, feel free to drop down the Outback channel and we'll help you out. See you then. Welcome back, and in this final video of the Outback series, I'll be going over setting up alerts. So I just threw up EU on the 5-minute chart. Let's get started. Hover over in the top left of the indicator and go to the 3 dots and click more. From there, we're gonna add alert on Outback TTF. So what you'll notice is if you had turned repainting on whenever you opened up the indicator, you're probably gonna see this caution sign, and it says this alert may not function as intended. That's completely fine. That's what repainting can do. And so what I mean by that is, let's just take this cell, Outback Kangaroo cell print, for example. If we had a cell alert, then there's a chance, since this is on the 5-minute time frame, that we would got alerted 2 minutes in to this candle that a kangaroo had print. That doesn't mean that it will stick, because if price completely reverses, the kangaroo can go away and we still got alerted that there was a kangaroo print. So that's what repainting is. It allows you to get a print technically before the candle close. So as a user, if you get the alert and you see the kangaroo print, make sure the candle closes and everything's confirmed, because if the candle doesn't close, there's a chance that it could reverse and the kangaroo goes away. So just keep that in mind. But with that being said, we have 4 alerts right now. We have the O RSI change long, and we have the O RSI change short. All this is the Outback RSI coloring. And so, for example, if we want to see when the O RSI, the Outback RSI turns bullish, let's just say we're right here. So as you can see, we're bearish with the Outback RSI. If we turn that on long, then we're gonna get an alert here because it turns green again at this point. Vice versa for short. If we're right here, we want to see the Outback RSI turn short, then we would get an alert right here. As you can see, there's a little bearish spec that happens at that point in time. Now, Outback buy and sell is as simple as this. If you put Outback sells, then you'll get an alert here, here, and here. Same thing for Outback buys. But what's the nice thing is this any alert function call. And so if you select this, you don't have to individually go through each pair and select buy and sell. This encompasses buy and sell together. So if you just simply add this alert, then if you get an Outback buy or an Outback sell, it will simply cover both. And then as far as the alert name, I would change this because it's pretty lengthy. What I would simply do is I like to add the pair. So in this case, we're looking at EU. I will say the time frame, and then I will say what case we're doing, and I'll just make sure I know it's a signal. So therefore, when I click create, what will happen if a buy or sell prints, then if I'm on my phone or here in the bottom right, it will say EU 5-minute case 2 signal, and then I can go to EU and I'm ready to go from there. But going back into the menu, we also have the expiration date of the alert, which is nice. So if you have this any alert function call, you can keep it open-ended. And so what open-ended means is it is running indefinitely no matter how many buy and sells you get. Or what you could do is turn this off and set a date that you would like this alert signal to stop. If we navigate to the notifications, you could see that I have notify on app selected. So if I have push notifications on my phone on the TradingView mobile app, I'll basically get a text message from TradingView when this alert pops. Show pop-up is turned on, and that's what I was talking about here in the bottom right. You'll see if you're on your computer, if you have show pop-up on, it will appear in the bottom right. You could send it to email, you could do a webhook URL, you could play a sound. This sound can be pretty sharp at times, so be careful with the volume, and then you could also do SMS as well. Now, in a further update, what we're also gonna do is we're gonna add alerts for case 2 in general. So in the future, what we're gonna do very shortly is add alerts for the daily levels. So in this case, since I'm using case 2, we're gonna have a case 2 general bias. So we can add alerts to know when the second previous daily high or low is taken, and we actually have a bias now, and also be able to differentiate between the second previous and the previous daily high and low break. So in this case, if we are using price must also break the previous daily high and low, what we can do is we will get an alert knowing our general trend bias. As you can see here, we had turned red because we were above it. And then also we will get an alert here breaking the previous high. So that way we don't have to be at the charts nonstop waiting for that signal. We can just have an alert that basically tells us, okay, now is a good time to look at the markets because there could be a potential kangaroo print happening for a sell. So like in this case, we would get an alert here in the future, and in this case, we'd get an alert here, and like about 20-30 minutes later, we would get a signal print here. So that way you don't have to really be staring at the charts all that while, and you don't have to worry about like being close to your computer to hurry up and enter the trade whenever you get this Outback print. You can kind of be forward looking and take advantage of knowing that you got both breaks, and now you could start watching the charts more carefully to see if you're going to get a signal soon. So with that being said, as always, if you have any questions about Outback, about the indicator, about the alerts, feel free to hop into the Discord and ask us. I'll see you then.
Hi everybody, this video is going to be showing you guys how to trade a little bit more of an intermediate style of the Stairmaster strategy. Many of you guys have watched the lives that I have done with Jay where we go over Stairmaster and we have shown how you can trade it with using a consolidation zone indicator. After those lives, so many of you guys have asked us if there was a way that we could make it into more of a rule-based version strategy, and could we backtest it for you. So we have done that now, and I'm going to go through the rules that we have come up with, and as well as go through the data that we have collected with it. It is better than the basic version of Stairmaster. So if you are looking for the version of that strategy, but a little bit more enhanced, this is it. There are a little bit more rules to it, not quite as simple as the previous version, but it is more intermediate, and it is a good way to help you start learning how to incorporate some more of those concepts about price action and technical analysis. By no means do you have to know how to do them, but it will help you, as always, if you have a little bit of that knowledge already. So please make sure you go through all of the stuff that Brutus teaches about the basic concepts that you can find in the Get Smarter section. You want to understand the basics of price action and technical analysis before ever starting to trade. So if you have not already watched those, please make sure that you do watch all of those videos. Then you can start jumping into some of these more intermediate versions that we're creating of the strategies to help give you a little bit of a higher win rate and a little bit of a better percentage gain. And you can start applying those concepts as well to help filter out trades that you shouldn't be taking. As far as this specific strategy goes, though, we have created rules, so it's not necessary to use those concepts, but they will help you, I promise. So let's get into the strategy itself. You only need 2 indicators that are required. The first one is Stairmaster. You should have this loaded in your indicators by now. So you're going to come to your invite only scripts and you're going to click on Stairmaster to add it on. When this pops up, it says to allow signal repainting. If you don't know already, this is something that will allow repainting. That means that the signal will print before close of candle. If you want to get an alert a little bit earlier just to know, to be aware that something potentially is coming, then you will allow this. You will click on this and click apply. What will happen is a sneaker will print, and as a sneaker is printing, it will send you an alert if you set an alert for it. That just means that it's potentially going to be a signal. You do not enter in until the close of that candle and that sneaker has stuck on the charts if you allow this. The only reason we allow this is because we want you to be able to get an alert a little bit earlier, because sometimes TradingView alerts do lag a little. You are one of those people who's trading on a smaller time frame and not miss that opportunity because there was a lag in the alert. You would allow signal repainting, but please remember, you are only entering in after the close of the candle and after it has confirmed that the signal has stuck on the chart. If you enter in too soon before close of candle, there is a chance that that sneaker may not stay on the chart because the criteria have no longer been met, and then the sneaker will disappear. So make sure you are always waiting for close of candle if you allow that. The second indicator that you're going to need is called the consolidation zones indicator. You just come to your indicators and search this. It's consolidation zones live, and it's by the Lonesome. So your chart will look something like this. You'll have sneakers printing from your Stairmaster indicator, and then you'll see a bunch of boxes and potentially some dotted lines if you are putting on the consolidation zones indicator. As for your settings, I'm going to scroll through them quickly here because I'm going to show you where they're listed at in a minute. But you guys can see this is the settings that we have been working with. We have kept them the same for the 5-minute and for the 15-minute time frame. We also kept them the same for US 30 and for NASDAQ 100. As of right now, the only two things that we have focused on to revamp and have data on are US 30 and NASDAQ 100 on the 5-minute and the 15-minute time frame. Those were the two most heavily requested things to trade this with, so that is what we went with first. We will be having updates coming out for gold as well as for Ethereum, but that does take time, so be patient with us and we will get that out to you in the future. But for right now, if you're trading this style of it, please only stick with US 30 or NASDAQ 100. Anything else you may need to trade with different settings, or you will have to test on your own. So those are the settings. Here's the style that we just have, and that's visibility. Okay, consolidation zones, this is very simple. It is all default. So when you're clicking it on, you just set defaults. That's what the style looks like, visibility. That is all you need. In order to be able to find the settings, what you'll do is go to the backtesting sheets. You can find them on either the Trading Floor website under the Strategies tab, or you can find them in the Discord. They are linked in there as well. When you come to your strategy, you just find whatever strategy sheet that you are trading. This is the Stairmaster one, as you can see, and then the settings will be listed here, so you can just copy them right off of this. What you'll see down here for stop loss settings, it says stop loss method. CZL means consolidation zone live indicator. It is default settings. In order to be able to keep things a little more condensed and organized for you guys, you will also now see that rather than having the templates separate, we are including them in the back testing sheet. So all you have to do is click on this link here. It will pop open TradingView for you, and it will have the ability for you guys to just quickly copy up in the right hand corner. What it will look like, there will be a copy up in this area. I don't have it here right now, but you guys will see a copy when you open the template. You will just copy it and save it to your TradingView. It will preload the settings that we are using for Stairmaster and Consolidation Zone for you guys. So that way you don't even have to worry about entering them all in. However, if you are interested in knowing more about the settings, you can see what they are here, or if you want to manually type them in, you can do that as well. So you also see that we are now writing out rules for you. So there are all the rules in case I don't cover something or you're confused by what I'm covering in this video. You will be able to come back and read the rules. We also will give you guys examples of each of them. Just to show you what will show a valid sell example and there's links that will explain it to you, and then a valid buy example, and again there will be a link with a picture highlighting why. For each of the rules, anytime there might be like a little bit of an exception, or there might be like something that we found during back testing, like, well, in these cases this would work better, we're also going to tell you the rule that we've created for it, and again give you an example of it. So for some situations you may want to refer to these examples and these rules to help clarify things a little bit better. We run through the general rules of the strategy, so please do your own due diligence and make sure that you come through and do read the rules and look at the examples that we are giving you in order to truly understand the strategy. There are certain times during the strategy where there may be times where you're a little bit confused as to what you should or shouldn't do. Please come look at the rules and look at the examples that we give you. Make sure that you are utilizing this. We have really spent some time breaking this down, coming up with the examples to help make this a little bit easier for you guys to be able to find the answers to your questions without having to like wait for us to respond. As always, after I go through this though, and if you've gone through the sheets and you have really looked at it and you're not sure still about the strategy, please feel free to message us in the Discord in the strategy room. We have people who are constantly answering back about that. All of our back testers are in there as well, who can also help answer questions about any of our strategy. Okay, so let's get into some quick examples here, and I will show you guys how this strategy works now. So the sneakers, you will need to see them printing. That is still a rule here. So if you know the old strategy, a sneaker would print and you would take the signal. What you're going to be waiting for now is the sneaker to be breaking out from a consolidation zone. A consolidation zone is anything that has the blue boxes. Those are what are printing for that indicator. I'll show you. If I hide it, they disappear. If we turn it back on, they reappear. So sometimes you will see the dotted lines if it's the most recent market, but the data feed for this only goes so far back. So sometimes all you will see if you go too far back is just blue boxes, like you can see back here. There's no dotted lines anymore. But in a live market, you will see the dotted lines as well as a blue box forming. It is the same thing, so if you are back testing this and your dotted lines disappear and all you see is blue boxes, just take the top and the bottom and that would be your zone. So what you're looking at in the dotted area is that there is a red line, and that would be acting as, in this case, your resistance. And then your green line down here, in this case, would be acting as your support. And then the blue box filled in between would be the consolidation zone. So you're seeing that there's consolidation zone in between this area of price, between this resistance and this support. And the indicator is marking this as a consolidation zone. We want to be trading the breakout of those areas. So when we see a sneaker print and it breaks out of one of these areas, that is a trade that would meet the criteria. In this example, I'm going to show you guys. We have a sneaker that prints. You can see the sneaker prints here. We have the previous consolidation zone. So we're looking to the left. What was the last consolidation zone that we have to work off of? We see the sneaker prints, and this candle that the sneaker prints on has broken through this consolidation zone. This red dotted line that has built resistance, this candle that the sneaker printed on has pushed up and beyond that zone, and it has broken it. So that would qualify as a breakout of the consolidation zone with the sneaker printing. This is a valid trade. It doesn't have to be inside the box. You are looking at a price action type of strategy here where you are seeing price break an area. So when we're doing that, you're looking at the area itself of price, not necessarily the lines on the indicator. Try not to get yourselves too wrapped up in the focus on the lines on the indicator. You just want to be thinking about, is this price area? So that is what we're looking at. We want to see the break of price. This is a breakout strategy using price action. Those are the concepts behind it. So you want to see the breakout of the price from that zone. You don't care that the zone ended back here. We don't care. As long as the price has broken it, it doesn't matter how long it takes to break that price area. It just matters that it does do it and that it was the most recent zone to the left. So the price breaks out, you have your sneaker print. This would trigger a valid trade. So you would enter into the trade at close of candle. You can see our entries here. Stop loss goes the bottom of the consolidation zone. So in this case, it would go here. And then we targeted 1.5 for this, but we also tested it with a 2 reward, and I will show you guys the data in a moment. But you could either target a 1.5 or a 2 reward with this. For this example, I'm showing you guys a 1.5. That's an example of a buy. So I'm going to show you an example of a sell now in replay mode. So let's watch the market here and we'll see what happens. You can see we have a consolidation zone that we are currently in. At this moment, what we can see is happening is we have a sneaker print and we have broken the consolidation zone. So we'll mark it up. We enter in at close of candle. We place our stop loss at the top of that zone. So the area we marked, come up to the top of that zone, and then we target 1.5. And we hit our stop loss. So you would have lost this trade. And that's okay because some trades lose and some trades win, but that was a valid entry for you to take. So those of you who are looking to still try and weed out bad trades, this would be a good example of one you could have weeded out. The reason is though we did break out, and yes, it met the criteria, the overall consolidation area, if you were looking at it, is actually more like this area that I'm marking. This is more the area you're really working within at the time that the market is trading. So you would be looking at this area. But I do not want to confuse you. If you understand what I'm showing you there, by all means, please remember that this might have been a trade where you're like, I don't know, it might not really be breaking out. It's probably just consolidating within the overall bigger area here. If you understand that, then make sure that you double check yourself with consolidation zones. And if you don't feel comfortable with the breakout, then do not take the trade. That's okay. You can skip trades. It will help you weed out some of these losses. If you are still learning how to do this and you do not trust yourself just yet, then you can go ahead and just use the consolidation zones live indicator like we're showing you guys and like we've done in the examples. And that is how we have back tested it. So we back tested it with just using the indicator. So the results you will see are just based on that. So if you are unsure about your own analysis still, there is still plenty of profit to be made just using the indicator version with the rules. So you can use either version, but I know somebody will ask, how can I weed out bad trades? And my recommendation would be to look at the actual market for what it is and where is that breakout really happening. Sometimes the breakouts don't always happen exactly where you need them to happen. So if that is the case, I'm going to go over some of the rules and the examples that we show you guys and we have here on the back testing sheet for you. So number one rule of this is that when you're receiving a buy or sell signal inside the consolidation zone, so like I said earlier, it's within that price range area. It does not need to be within the physical zone itself. It needs to just be in this price range, and it needs to be the most recent consolidation zone to the left of the sneaker that you are looking at that prints. When this happens, you get a 1 candle grace period for entry. If the next candle after the sneaker doesn't break the close above or below the consolidation zone, then the setup is invalid. So as you guys can see here on my example, we have a bunch of sneakers printing inside the consolidation zone. These are not valid trades. They did not break out. That is not a valid trade. This is not a valid trade. The sneaker prints here and then you get a 1 candle grace period to break out. It does not break out. Finally, you get a sneaker that prints here, and this candle does break out. So as you can see here, this is an example of a valid trade with the 1 candle rule. So you can see the sneaker prints here, and 1 candle later, it does break this previous blue box zone to the left. That is a valid trade to take. That follows the 1 candle rule. Here's an example of a buy that follows the 1 candle rule. Again, we have our sneaker that prints, our blue box that we are working within our consolidation zone. The sneaker prints at the close of this candle, it does not break out the box. However, 1 candle later, it does break out of the box. This does meet the criteria. It follows the 1 candle rule. So this would be a valid entry. To just show you guys a couple of more examples of invalid entries. This candle, you can see the sneaker prints on. We are trading within the zone here, and then 1 candle later, we do not break out. So this does not count. You do not want to get in way down here when it finally does break out. The reason is it is way past the price point where you need to be entering. The breakout of price and the sneaker need to be in the same area. This move is too far gone by the time you would be entering here. This would be an invalid trade. You do not want to get into this trade this late down here. You want to be getting in up here. Another example of an invalid trade here, this is just showing you an invalid buy. Again, you have a sneaker print, and we are seeing a bunch of sneaker prints within here, here, and here as well. All of these are inside the box still, and the one candle after all of them does not break out. You can see the breakout actually doesn't happen until 1, 2, 3 candles past price. So you want, again, the price, breakout, and the sneaker to be close together. You want them to be at the same area. Price has already pushed up a good amount at this point. You are too late to this move. There is a lot of move left in this example, but again, it does not follow the rules. So you would not enter this trade. This is not a valid entry to take. So rule number 2 that you guys will see here listed is receiving a buy and sell signal outside of the consolidation zone. Once the consolidation box has completely formed and the candles are now painting outside of the box, you can look for an entry until price breaks above or below the box. Once price does break and closes out of the consolidation box, you have a 1 candle grace period for a sneaker to print for a valid entry. So here's some examples of what we're talking about. As I had said earlier in the video, it doesn't matter if it prints within the actual box. Just imagine that the line of the price, like if you need to draw the horizontal lines like I showed to be able to identify it better, then that's fine. You just want to see if you extended this blue box out, would this break? And if the answer is yes, then that's a valid trade. It has to be the most current box to the left though. It can't be this box or this box. It has to be this box here. In this example, you can see that the sneaker prints where the price would have been still inside of the box if it was extended out, the blue box. The candle with the sneaker that prints breaks out of that area, and that is a valid entry. As you guys can see here, this is an example of a buy. You can see we've even made notes where we show that if you extended out this blue consolidation zone box some, that we are looking at, this is not a breakout, this candle is. But again, we're extending it out. So the sneaker would print, you would look to the left to the most recent consolidation zone box and see, does it break that area? This example, it does break that area. So the first candle that breaks the zone is a sneaker, and that means this is a valid trade. So rule number 3 will explain a little bit about price breaking and closing above or below the zone, but then it comes back in. So this is another example of something that you may see happen. It may run into scenarios where price will close above or below the zone, but then it will come back into the box area. It will start trading back in that area of the box. As long as there are no new zones that have formed, consolidation zone boxes, then similar to rule number 2 that I just showed you, you have a 2 candle break period to get a valid entry. So I'll show you guys an example. Here's an example of a buy. We're going to pretend this sneaker here prints. When we look to the left, the most recent consolidation zone is here. So this is the consolidation zone that we are working off of for this sneaker. Although price had broken up and above, that is okay. There was never any actual trades that needed to be taken here. The trade that we're waiting for, the sneaker, is here. So price does break above, but no sneakers printed. We're simply waiting for a sneaker. And then a new zone never prints. We're still working off of this one. So even though price broke up, there was never a valid trade. Price comes back in, is trading within this area. So we're using this zone still. Price comes back in to this box, then breaks below it, and the sneaker prints. So that does equal a valid trade. So again, we would just extend out these areas of support and resistance if that helps you to be able to visualize it better. So we drew this line here so you can see the price is what we want. We want to see that sneaker break that price area to the most recent zone to the left, and that is what you have. So that is an example of a sell. Here's an example of a buy showing the same thing. So we are going to pretend you get an alert for your little sneaker here. you're going to use the zone to the left, the most recent one to the left. That is this blue box that we are working within for this sneaker that prints. As you can see, we make some notes here to help explain to you guys a little bit better about what's going on. But the zone you can see we were working in, price does come up and then it comes back down to trade within this box again. Then the sneaker prints and it breaks out of this box area. If we were to draw our support and resistance areas here, you would see that this sneaker would break out of that zone. So price does break out of this previous zone to the left, and the first candle that actually breaks out of it, again, you do get the sneaker, so that is a valid trade. The extension for rule number 3 is when price is breaking or closing above or below the zone and then reverses to break or close in the opposite direction. So to explain this a little bit better, sometimes price will break out of the zone and then it will quickly enter back in. So it's kind of like a fake out. And then it will continue to the point where it breaks and closes out of the zone in the opposite direction. As long as there are no new boxes formed, this is still a valid entry, and it will need proper judgment in knowing when it is valid or not. So this is the extension of rule number 3. You can enter a buy and a sell entry in these cases, but you should never take 2 trades in the same direction. So if you aren't sure if it's valid, then simply don't trade it. You're not going to stack the trade and take a buy and then if you lose, take a second buy again. That is no longer valid and you are to wait until a new zone and trade appears. Here is an example of a sell and what we mean by this. Price breaks above the zone. As you can see, here's your zone to the left. Price breaks above it. But you never get a long sneaker. Also, it doesn't last long before price quickly retreats back into the zone. So you can see you get a push up, hits a little area up here, and then comes back into the zone. So these candles here are trading within this zone to the left. You receive a small sneaker inside of the zone and you have to wait 1 extra candle to see if it will close outside of it. Remember, you have the 1 candle rule. This candle prints, you get a sneaker, but technically close of candle does not break this zone. So you need to wait 1 more candle to see if this is a valid trade. When this candle prints and closes, it does break the zone. You can see the price does close at close of candle here, just slightly below this zone. So this would count as a valid entry. So you would enter in here. What you wouldn't do though is then enter in on this candle, because you can see price comes back up and is testing again on these 3 candles in this zone, and then you get another sneaker and another breakout of it. You do not want to stack your trades like this. You just want to take 1 at a time. You would not take this sneaker trade here. You are already in the sell here. You would want to wait until a new zone forms and another sneaker breakout happens. Please do not stack your trades or over trade it in this way. That is not how it was tested. You are just going to take the 1 breakout. So here's an example of a buy where you get double sneakers. So you can see we get a sneaker print down here. You receive a long sneaker and it is inside the zone. So you must wait 1 extra candle for it to be able to break out. This zone is our zone we are using. This is the most recent zone to the left where you can see that price does kind of come down. It breaks below it. You never get a short signal. Price comes back in to trade within this zone's price and you get the long signal. So you don't break out at the close of this candle, but remember we have the 1 candle rule. We break out on the next candle and that is valid. So you would enter in at the close of candle and then you can enter here. You do get another sneaker that prints here. You do not take another long here. You would just ignore this sneaker. Your entry was back here. You would only take a second long if another consolidation zone had printed. One of these had printed somewhere in between. Otherwise, do not stack your trades in the same position based off of the same consolidation zone. As for stop loss placement, I kind of showed you guys in some of the examples and you can see it in all of our markups that we have here for you. But you want to place the stop loss on the high or the low of the zone, opposite of the direction that you are trading in. You can see any of the examples of how we are doing this in the backtesting screenshots. We also have them all in the examples I just showed you guys, as well as if you click on any of our links, we will show you all of the markups in there so you can see how we do that. As you can see, like for example, when we are entering in here on this trade, your sneaker prints here, this is your previous zone, this blue box, this small one here to the left. Your entry is at the breakout, your stop loss goes at the top of that blue box, and then you would target your 1.5 or your 2 reward. And that is how you would do that. And if it was a buy, it would be the opposite scenario. For example, here we have a sneaker print. We're basing it off of this small blue box we have here to the left. Stop loss goes at the bottom of that, and the take profit would target 1.5 or 2. There is an exception to not using just the blue boxes, and that is if your stop loss when you go to place it is greater than 120 points. If that is the case, then you will place your stop loss exactly half of the length of that blue box. So you will half the consolidation zone box. If you are an experienced trader, though, you can feel free to play around a little bit with structure, using market structure or using your own analysis based off of what you're seeing to the left or a previous price action. But for those of you who are still learning that, you can just half the consolidation zone box, and that is how we back tested it. So we went pretty basic to keep it rule based for you guys. Here is an example we show you guys of what we mean by this. As you can see, if you are entering into this trade, so we look at our consolidation zone here, our sneaker prints at close of candle, it breaks out, so you would be entering in there. When you go to place your stop loss, you would have had to place it all the way down here. That is a very large stop loss. So in our testing, we found that typically the breakouts can be halved if they're greater than 120 points. So you will see what we've done here is we half this blue zone. So the consolidation zone will be halved if it's greater than 120 point stop loss. So as always, you guys can see here with the backtesting data, we start with the 100K account and we see what it would make if we tested it. We did test this all the way from January up until the end of June. July will be tested, but July has not finished yet, so that will be added in as well. So we have 6 months worth of backtesting data. We have over 495 trades that have been taken. As you can see, there was 67.5% gain on the account. The overall win rate is 45.45. That's testing every single session. I will get into that in a moment. This is actually quite higher if you are selective about your sessions, but just so you guys get an idea of the overall numbers that we were working with this. You guys will also be able to look at all of this yourself. You'll have access to this sheet. We have NASDAQ here with 1.5 reward, and then we have a NASDAQ with the 2 reward. We have US 30 with 1.5 reward and US 30 with 2 reward. What is probably the most notable about this, I would say, if I was trading NASDAQ, I think the best win rate session and best gain is to trade mixed. So you can see you have a 61% win rate and a 31% gain in the last 6 months trading just mixed session with this strategy using a 1.5 reward. If you go for a 2 reward, we had seen that you could have a 52% win rate and a 34% gain. So it's pretty good. If you want to trade all of New York, so that means trading mixed session and the remaining New York hours that are left after it runs. So this would be like the 8-hour session. If you wanted to trade both of these together, you could, but New York on its own is not all that strong. It's not terrible, but it's not great. So if you wanted to continue trading through the day, you could. I would probably recommend sticking with NASDAQ on mixed session primarily. London and Asian are okay. They're not terrible again, but the bigger bang for your buck and time over the last 6 months would have been to trade mixed session. You could probably pick up one of these other sessions, London, New York, or Asian, as an add-on session to mixed, but mixed would be my primary focus if I was trading this for NASDAQ 100. When we look at US 30 here, you can see on the 1.5 reward that the best session actually overall is New York. So this is after the mixed hours have finished. If you guys aren't sure what that means, please do kind of like poke around or ask some questions. But basically, mixed session is when London and New York are overlapping. There is a time frame where there's a 4-hour period where they overlap. So once London is closed and totally done trading for the day and only New York is left running, that's what this is. So that's the later part of the New York day. So whatever that means for you time-wise, do your own time conversions, but that's what this would look like. So US 30 does better at the later half of the day for New York. So you can see you could have had a 55% win rate and 18.5% gain on the account for the 1.5 reward. And for the 2 reward, you could have had a 48% win rate and a 23% gain on the account. What I would say here is that Asian session does terrible. It is negative and negative here. So I do not recommend trading Asian session at all with US 30. And I would actually say that you probably should avoid London. It really doesn't seem worth it. You have a negative gain here and you barely have any gain here for 6 months. Seems like a lot of work for very little gain. So if you're trading US 30, I would stick with mixed session. Isn't terrible. Again, this isn't the worst. You are making some gain and here as well. But the best session to trade would be the second half of New York. Again, I would make New York my primary focus if I was trading US 30 and then maybe having mixed as an add-on to it. So those are your choices as to how you guys want to break down this data and what you would trade. But we did every session for you guys just so you can see what does well, what does really poorly, and what does like kind of in between. So you can make your own trading plan and schedule as how you would want to go about trading this. We also have over here the monthly breakdown. So you have NASDAQ 100's monthly breakdown, US 30's monthly breakdowns. So you could see what like each of the months kind of totaled in there if you wanted to see individual months, January, February, March, April, May, June, and then July will be added in afterward. At the top, we have like the sessions broken down individually to make it a little easier for you to see. But again, it doesn't look that great for Asian. This is the blue over here. Negative 9%. That doesn't really help the overall percentage gain. The win rate's pretty low. London is okay. New York is decent and mixed looks really good. This is how I would look at it, just saying that mixed seems to do very well trading this, whether you're trading NASDAQ 100 or US 30. And the remaining portion of New York does very well trading both NASDAQ and US 30. So I would be sticking in these 2 sessions if you're going to be trading this. The overall win rate and percentage gain honestly could be a little bit higher, especially if you're taking out Asian session altogether, because like I said, there's like a lot of negative sessions with Asian session. So this actually could be a little bit higher, but we want to show you the good, the bad, and the in-between, so that way you guys can make your own decisions on how you would want to go about trading this. So this is all the data we have here. As I said, this has only been tested so far on US 30 and NASDAQ 100. So it primarily is going to be trading during the New York session that we have there. If you are interested in trading something like the DAX or maybe the France 100, you will have to test those yourself, but please do look into them. If you have to trade during London session, those would probably move better during those times. And I would look at maybe potentially like the Australian 100 or maybe the Hong Kong 100 if you're looking for something to trade during Asian session. Again, we have not tested those, but you guys have the strategy now. You understand the rules for it, so feel free to go ahead and test it. Under the Get Smarter section, you guys can download the journal there, and you guys can go ahead and back test it yourselves for whatever your specific session is that you trade. That way you're not wasting all the time back testing. We're doing a lot more in-depth back testing to show everything because everybody trades different times. We're doing that work for you guys, but if it is something specific, please do test it. Just a reminder, what you're going to be finding everything on your back testing sheets now. So your settings will be here, the link for the template for TradingView will be here, and then the rules as well as all of the examples and all of the markups that we're always showing you guys, they're all in here. So every trade that we have back tested, we log and we will show you guys in here. So if you guys have any questions or you're unsure about what to do here or you're not sure about a trade or something like that, feel free to ask us. Please do ask in the hashtag strategy support room in the Discord, and somebody will get back to you guys about it. I hope this helps some of you guys who are looking to take Stairmaster to the next level of your trading journey, and best of luck with it. Bye.